Hi guys, how are you? My name is One Titanium. Welcome back to IMMT. MMT. That word has become so dirty. Oh God, I have to change the name here shortly. This thing is just geez, the stuff that they're saying. Forget about it. Anyway, let's talk about the dollar. Remember when somebody was telling you, "Oh, yeah, the mother of all shorts is the dollar at 88, and now it's at 95." Right? That person got his ass kicked. But oh look, the dollar's coming down. You can't listen to fake MMTers. You can't not do it. Not not advisable. Anyway, so as I said in my previous videos, I didn't think that the dollar was over. We had a nice little structure that built in here, some pressure, and it's starting to push up. I would not have been surprised to see a little bit more downside. Okay, test this previous low and then bounce. But ultimately, it just bounced now, and that's it. It's back into structure. So right now we're looking for a little bit more further upside. Again, if anything was going to make the dollar devalue, it would have been tax cuts, right? Because they are money printing as per MMT. And as per fake MMTer, certain soul out there who said, short the dollar down here because higher interest rates are inflationary. Why they're inflationary? Because you have to pay higher interest to the bondholders. So that's money printing, so that should devalue it, right? And then supposedly the higher interest rates at 2%, which is highly accommodative still, we're supposed to raise inflation, and that would be that would devalue the dollar. And instead, the complete opposite happened. Okay, he was touting that, oh look how smart I am. See, the dollar is falling. No, no, no. The dollar was not falling. The dollar was correcting, and it was correcting from this huge move here. Okay, had its little consolidation, corrected, and now it's going back up again. Never saw it coming, and that's why he was wrong, and his poor subscribers got crushed. Okay, fake MMT, fake MMT. And here is the chart that pretty much says it all. Okay, dollar strengthened, and look at what the rest of the world's currencies have done. They're getting crushed. So next time you hear, oh, it's the weaponizing of the dollar. No, it's not the weaponizing of the dollar. We are near full employment. The Fed was expecting a higher inflation, so they preemptively started to raise rates. Okay, inflation did not come because of higher interest rates. 2% inflation, 2 point whatever it is, 3.5 core inflation is not inflation. You need to go look up and understand what the word means. Okay, so they preemptively started to raise rates because they saw the economy was improving. They saw unemployment falling. That means there's more wages out there, more discretionary income, more consumption. 70% of GDP is consumption. Okay, so when the economy is producing, that means that those dollars, that money printing, okay, is being reflected in the GDP. And that's why we have now what 4.2% GDP, right? That's very nice. We are on the high end of it. Okay, we're not China, we're not Bangladesh, we're not India. Okay, but it is being reflected in the economy, and that's what the Fed told you, 3 years ago. Okay, and supposedly you were supposed to sell the dollar because it's going to devalue because of all the new money printing. No, 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 because the economy is kicking ass. So all this nonsense that everybody's going to give up the dollar, no. We are 5% of the global population producing 25% of global GDP. Okay, that's just the way it is. Nobody's going to say, oh, you know what? I'm not going to deal with 25% of global GDP. I'm just going to stick with the 75, and I'm going to have a prosperous economy. No, you won't. No, you won't. So again, listening to these people, it's a big mistake. Don't listen to them. Again, if you really want to learn real macroeconomic understanding that applies in the real world, okay, or not on some theoretical spreadsheet and so on, then you need to come down to patreon.com/mindthisone and I will teach it to you. Okay, um, it's $20 right now. This is going to change to $150. Okay, so the slots are limited for the $20 subscription. So if you're going to do it, you should come down fairly in the near future. Okay, soon, fairly soon. And the reason I have to increase it is, one, I have to pay my instructors. We have instructors in charting. We have instructors in macroeconomics. Um, these people need to get paid. They do such a wonderful job, and they do it for free. Okay, they were my former students. Now they have become instructors, and hopefully soon enough they'll have their own Patreon page. So they need to get paid, compensated for what they do. All right, $150 to learn how to understand real-world macroeconomics and investing. I mean, come on. $20 is ridiculous, right? So even $150 is ridiculously low, okay? Because it's not this, I'm going to go to university and they're going to tell me, supply and demand and blah, blah, blah. This is way advanced, way, way, way advanced. It's very important for everybody to understand. And even if you don't want to do the investing thing, that's fine. You should really know how real-world macroeconomics works, because policies are going to make a difference, okay? And you want to know what that difference is going to be. Is it good? Is it bad? So there's so many aspects to what we offer at patreon.com/mindthisone that I think you're really going to understand how important it is to have such information. So come on down, and I'll be more than happy to teach it to you. All right, so let's get back to our analysis. Euro USD, okay, we went long. It was a hedge because we have a lot of long dollar positions. Initially, we went short because we thought up against this trend line, it's going to reverse fairly quickly. Didn't do that. It built some kind of bull flag up here, as you can see. Okay, typically what happens with these flags is they resolve to the upside. And again, as I told you in previous videos, what this has happened before, this V bottom, okay? And then ultimately it resolved to the downside, and that's exactly what happened. But again, it's an acceptable loss. It's the cost of doing business because we have other currencies that we are long. So you have to put everything in perspective, okay? Really quickly, we don't give trading signals. We're in patreon.com, although I do have to tell you when I enter and when I exit. Otherwise, you guys will never learn. Okay? We encourage and demand that you use a paper demo account. Why? Because it's going to take you 6 months, a year, even 2 years to learn how to do this. Okay? There's no reason for you to use your hard-earned money when you don't know what's really going on. Okay, so you take a practice account, you practice it, you get good at it, and then once you're good at it, then you can take that information, go off on your own, and then you can apply it with your own money, because you're going to see how it all works and where the risk rewards are. We don't know what the future is going to hold. We don't claim we do. We don't claim all profits. Okay, but over the course of time, your winners will be much more than your losers. Okay. And that's the whole point. Like I said, we have instructors in macroeconomics. We have instructors in charting. We're on 24 hours a day, 7 days a week. We do it all over Facebook Messenger. We do it on Patreon. We do it on our closed Facebook page, and it's ongoing. And you can go at your own pace. Okay, you can be as interactive as you want, and still the knowledge is going to come, and you will see how it all works. So okay, so let's continue. S&P 500 up against resistance, falling back down. Taking a look at the Nasdaq, okay, slightly above this trend line, okay, up against the bigger trend line, the longer term trend line. Let me show you that. Okay, let me take this out. I was teaching something. Okay, so we're up against it. Now, this is what's going on. It's the end of the month. It's the 31st of August, midday, 1 o'clock. The likelihood is during this holiday weekend is that we'll probably get some kind of a reversal come Tuesday. Okay, so we're looking for the S&P 500, Nasdaq to start pulling back. Okay, now how it pulls back, how it's going to develop, is going to tell us a lot. Um, but for now, um, we're going to be looking for some kind of a correction. If it does not correct, okay, if it does not correct, and it continues to plow higher, then at this point we're going to start saying that we are in euphoric land, okay, and this is going to become valid, okay, euphoria. You don't want this to start going up like crazy, okay. Pulling back will be healthy, okay. How much it's going to pull back, I'll know probably next week or the week after, okay. We need more data and information. But overall, the economy, the U.S. economy is doing well. Very happy with it. There's no reason to be thinking that it's going to go into some kind of recession. This could change in a week or a month, okay? But for now, there's no reason, and we are net bullish. It's just that we feel that price of these indices are a little bit ahead of themselves. Taking a look at the emerging markets, and as you can see, we are still within this channel. We're looking for that next move higher. It's not happening yet. Nothing more to talk about that. 10-year, again, 2.85. Oh, higher rates across 3%. It's going to go much, much higher. No, it's not. No, it's not. And there's reasons for that, which I'm not going to go into now. Okay, so they were wrong on that, the fake MMTers. Aggregate bonds, okay, we're still looking for that next move higher to come out of this structure. So that's looking okay. Oil, okay. Oil came, tested the previous high, having some difficulty. Again, come Tuesday, this might start to correct. Okay, so we'll keep an eye on it, and I'll keep you posted. Other than that, Turkish lira, I don't think this is going to be over. There's $179 billion that they have to pay by, I guess, in the next 11 months. And I don't know where they're going to find those dollars, and 60% of it is dollars actually, euros and pounds and whatever. It's going to be difficult for them. That Qatar 15 billion that they gave them, they loaned them, is a drop in the bucket. So I don't think this whole Turkish lira thing is over yet, and I don't think it's going to be over for quite a while. Again, the 179 billion that they have to refinance at very high interest rates. Right now, I think the 19.75. Think about it. That if they're paying 19.75 for the next 5 years, they're going to double the amount of currency. What does that do to the value of the currency? Well, it lowers it, right? Inflation is going to go through the roof. Right now it's showing, I think, 15% or something like that. It's going to be much higher, much higher. Some people are saying that, China's going to come in and bail them out. No, they're not. Okay, first of all, they don't want to piss off the U.S. during a trade war, which is a bullshit kind of trade war. See my previous video about that. The second thing is, if they do something like that, it's going to be because of the Silk Road, and they will bend them over and take really good care of them. Okay, meaning China is going to take care of Turkey. I don't see that happening. Okay, what does save them is that 7.1, 7.2 devaluation, where it starts to really hurt the Turkish banks, as per Goldman Sachs report. So there's a lot of moving parts, but for now, we need more data, but we are looking for further devaluation in the Turkish lira. Taking a look at the VIX, it's starting to rise, 13.8. Again, it's that holiday reversal that probably will happen on Tuesday or Wednesday. It's the end of the month. People are protecting their positions, so you're going to see an elevation in the VIX. And then finally, Bitcoin, we're waiting for this to break down. Okay, has nothing to do with macroeconomics. It's going to come down and probably break the low at some point. Okay, that's about it. Again, if you are interested, come down to patreon.com/mine this one, and join up. $20 for now, and soon it's going to go up to $150. Okay, so don't miss out on this great value, this great opportunity. You're going to learn a lot, and at the very, very least, if you're not going to subscribe, please do yourself a favor. Buy the National Debit by my friend Edward Delzio. Okay, it's going to teach you so much about macroeconomics and the monetary system. Okay, so that's it. Thank you very much. I really appreciate your support, and I'll see you guys later. Take care. Bye bye.